Now let's move on to our next guest, and according to them, global buy-side and sell-side market participants agree that data accuracy and data feed reliability are the most important drivers when choosing market data providers. Joining us to discuss key trends and implications in the data sector is Garrett Lim from Six Financial Information. Garrett, thank you so much for joining ausbiz.
Morning, Danny. How are you?
Very well indeed. Very sunny and nice in Sydney, thank you. So when it comes to financial institutions on the buy and sell side, how important is data accuracy and the reliability of the feed?
Yeah, we did surveys recently with a lot of buy-side and sell-side participants. We see this a lot where when we speak to our customers, they talk about costs, and obviously it's a big issue, but actually we wanted to really look in detail in terms of what is the most important for market data participants. But it's quite interesting, before we go on to that, is that the adoption rate among financial institutions in terms of cloud is actually relatively low. Only 30%, Danny, of market data delivery now only comes through the cloud. So it's actually quite low right now. So there's this big move now towards technology adoption and moving into the cloud. But actually what people are doing is actually quite little at the moment. Do they want to do that? Yes, for sure. But obviously, cost is a big issue. But actually when we did this survey, as you mentioned, 90% or the bulk of the participants actually say data accuracy and reliability is the most important thing. So we want to maintain costs and we want to make sure data is accurate, but yet there is a argument now in terms of how to bridge that move towards cloud. So I think there's a big transition going on in terms of financial institutions. So data budgets are on the rise. And actually in the latest report, we actually saw that 80% of buy-side participants believe budgets will rise. And I don't think that's a major surprise, but actually 50% of those people believe it's going to rise by another 5%. And as you know, the last 5-10 years, we've actually seen a very big increase in data costs for both buy side and sell side. So there's definitely a big move now in terms of we need to move up the technology curve. We need to maintain costs. But I think the most important thing is that the reason why people are not as fast as people realize is that because data accuracy is the most important. And as you know, financial institutions are major, big, complex organizations with different systems. So I understand that the difficulty in actually moving into, I suppose, a different delivery mechanism of market data, which is really important. It's really the engine or the oil which really drives financial markets. So you can't just really switch it off over the weekend. You've got to do testing and over the weekend. And as you know, markets are moving pretty much 24 hours a day. It's really difficult to really take a pause and really change technology systems. So it's a really interesting situation where we're in right now, Danny.
Totally. How much is the move for generative AI influencing this data collation, the timeliness and everything else? Because I can't help but feel that generative AI is going to permeate the financial sector as much as it is anywhere else.
Yeah, very much so. I mean, this is something we see a lot. How do we really embed AI into systems? I mean, give you an example. We're beginning to use essentially data as an explainer, and obviously AI is a key tool in that. So rather than the old days where we say P of Apple is 30 times, what does that really mean? What we really need to do is we actually need to put that into context. The last time Apple was at 30 times, and bond yields were at 5%, and the market was up 52% or whatever it is a year to date. How does it perform? Typically the stock might move up another 15 or 20%. So I think investors and even retail people need more than just data. They need data as explainer, and generative AI is really going to come up with, I suppose, historical cases of where stocks could potentially travel to. So the bottom line is that the increase of data will only is going to become even more important as we need more and more different types of data to really supplement or augment what we have right now. So perhaps if we did this survey in a year's time, perhaps the budget numbers are probably going to rise even more as we really look for more different alternative sets of data, which are potentially available for free. But I think most important thing, there's going to be a lot more data companies which are really going to specializing important data sets, and they're going to really provide insights which are really key for the market, and that might actually come at a cost, unfortunately. So there's a balance really in terms of costs and value and what you really get in return. But certainly, I think if you get a stock or a trend or data which really gives you insights, that's worth a lot of money.
Yeah, absolutely. And I think this is the other chart that you have, which kind of refers to the trade-off between the quality and the stability of the data versus the coverage and the cost. So ultimately, to get the best data in the most timely fashion, the most detailed data, institutions are going to have to pay up for it. But of course, it's never a never-ending, stick of budget when it comes to financial
Yeah.
institutions.
And also, I think to be realistic, we're looking at, you know, financial institutions which have got technology stacks from many, many years ago. They haven't had the luxury of redesigning the technology stack. So we understand it's a bit like changing your tires when you're driving at 80 miles per hour. So it's very, very difficult. So we're looking at sort of new technologies really augment or sit on top of the current technology stacks right now. And there are lots of technology companies who can do that. And we as a data provider can really help these financial institutions make the most of what they have right now. And I think the most difficult thing now right now is that actually there's too much data which is floating around banks and financial institutions right now, which they're paying for and they're not using. And what we need to do as an industry is really try and harness what they have right now, supplement that with new technology, using the best of class delivery mechanisms and also GUIs to really see what data they have for the banks to really use that and turn that into insight. So I think that's really, really the key thing. At the moment now, there isn't really a big catalog of data. We're trying to do it as a market data vendor, but you can't really go in and sort of look at what types of data which is available, not only in your own current bank or financial institution right now, but also what's available outside. So it's a very, very fragmented market right now. Will we get into something which is a little bit more structured in 2 or 3 years? Of course we will. But I think between now and then, it's really going to be a case of probably buying more data which might not be available and just sifting through what is actually really important. So I think at the moment now, this survey is very, very interesting to see that actually budgets will rise, unfortunately, before we really see that cost curve come down.